does any of the commentary today perhaps add to the bullish case that we often hear from analysts on Chinese stocks moving forward?
I don't think it's a lot to do with Xi Jinping's speech. I think what you're seeing is that China is the only emerging market that investors want to buy, and for a very, very good reason. Most emerging markets don't really have a path forward. It's not clear how they're going to grow. It is not clear whether they're going to catch up. In fact, they tend to have too many sort of inputs that are deteriorating in pricing and attractiveness, and not enough of really attractive areas like intellectual capital or intangible capital. China is the only emerging market that actually building a very wide waterfront. The rest is just mediocre. And that's the reason why investors have been consistently buying China, certainly over the last few months. But I think that's potentially could go forward for many, many years to come, actually, not just for a month or two.
So I wanted to ask you where that could potentially leave the United States, and where is that going to leave US stocks? At the same time, we've seen markets there look improving since their April lows, but certainly not out of the woods yet. Do you think earnings season is going to be an important driver for stocks in the United States, or is ultimately a vaccine going to be the decider here on whether or not we see a clear breakout for US equities?
Neither. I think the most important thing that is driving equities is a very low cost of equities. And cost of equity is not going to rise, not just because risk-free rate cannot rise, but also central banks are suppressing risk premiums, whether it's equity risk premiums or debt risk premiums. That is your primary driver. But over the longer term, if you were to think, what countries do you want to be in? What markets do you want to be in? Again, both US and China look very good. One can debate a little bit about Japan. There is no question that the rest of the emerging market universe doesn't really have a path forward. Europe is incredibly complex. So I always tend to believe, and certainly in the last several years, that US and China are the two primary markets. And the only thing that can derail China if it becomes uninvestable. In other words, if in fact the conflict between the West and China gets to the point that most global investors will be either unwilling or unable to buy Chinese equities. But assuming that extreme scenario doesn't come through, then I think both US and China equities over the longer term look good.